All right, without further ado, this is the most exciting video of the course, and that is how to maximize your taxes. Now, it's not that fun, but it's something you have to think about. You have to pay taxes. You are earning an income, and the government gets a piece. However, I would say if you do it right, and if you're in a lower tax bracket that I would assume many of us are, you're going to turn out okay. So let me teach you how to do it and avoid some of the common mistakes that can happen. All right, first of all, you want to get a app like this one. This is called Strive Drive. Strive Drive is a really, really helpful app, and what's really sweet about it is that it's free. The other most popular one is called MileIQ, and there's plenty of other ones out there on the market, and by the time you are watching this video, there may be even better ones. So do a little research, but this is the one I use. It's free, and it's clean, and I like it. It's simple. Now, remember, because you are not an employee of Lyft, you technically don't work for Lyft or Uber, you're an independent contractor. They don't give you benefits, and they don't deduct taxes or Social Security or Medicare or anything like that. So like if you ever worked a normal job, you fill out a W-2, and let's say you're getting paid $1,000 a week. However, because of all the things, you're maybe getting $700 a week, and it's very frustrating. And so it's super cool that you get the entire amount, and none of it's deducted. However, you need to keep track of all of it. That's where MileIQ and Strive Drive really, really come in, and they're really helpful. So a couple of things to keep in mind when you think about how much you're going to pay for taxes. The typical wisdom is 20 to 40% you set aside. So let's just say 30% of whatever you have set aside to pay your taxes. However, if you do it right, you're going to probably pay a lot less. And if you have that 30%, then boom, that's a little bonus for you to keep, whatever the difference is. Something you have to keep in mind is, what kind of tax bracket are you right now? For most of us, we're going to be doing this part-time and not full-time. And so think about all your other streams of income. In total, are you going to be over, is Rideshare going to push you to another tax bracket? And if that's the case, it may you may see increase in your taxes. For many of us, we're still going to be lower, and so then it's not going to hurt us at all. You know, if you're married, you have kids, it really, you have to look at the tax bracket. Just Google tax brackets in the U.S. For this year, and you can get a feel for what percentage you're paying. So if you're wealthy and you're doing this on the side, then you may see some significant taxes you need to set aside. But I would say most of the audience who's going to watch this video, you're actually not going to pay much taxes. So as an independent contractor, if you earn more than $600, Lyft is going to send you a 1099K, okay, 1099K. They can also send you a 1099 MISC, which is if you are earning a certain amount by referrals or other kind of bonuses that are not driving related. Okay. Now I'm going to set a link in the notes that you can look more clearly at the different tax stipulations, and it's important to look at the links because this stuff changes all the time. Now, you want to use Strive Drive and MileIQ primarily because you can keep track of all your expenses, okay, and how much you are spending, and so what you can deduct. Now, at the end of the year, you can see a tax statement on Lyft and Uber and see how much you made, and that's all handy there and set aside for you, and you can calculate all your earning statements. Now, when it comes to expenses, if you don't calculate them and track every single one of them, you're gonna be missing out on a lot of savings. So tax deductions, let's just talk about tax deductions. So right here you see I have $4,159 of tax deductions at this point. However, what does that mean? Does that mean that I get $4,159 off my taxes? No, no, no. Let's say I made, and I made more than this, but let's say I made $5,000. If my tax deduction is $4,000, then I'm only going to be taxed on if I made $1,000. Remember, it's tax deducting. It's deducting off your total income, not what you'd pay for taxes. So please, please keep that in mind. That is super important. Now, tax deductions, according to the IRS, is just basically anything that is necessary to run a business. Okay, so let's look at some of the different things you can do. So if I press add, I can look at add an expense. And let's say I'm a delivery driver on the side. I can add, you know, $16 for DoorDash hot bags, and that's an expense because I need that to run my business well. Anytime you do a car wash, you can add it. Let's say you do a $30 a month car wash pass. Boom, you can add that. I would also encourage you to keep another note for the things that are reoccurring that you can add. Office supplies, passenger goodies. Okay, if you get some Jolly Ranchers or candy or whatever it is for people to have, you can tax deduct it. Now notice this. So let's say it was $10. Usage for work. Is this something you're going to be chowing down and you're going to be giving to your kids? Then you can't claim with good, and you need to be honest. You can't claim that this is 100% for work. So you need to keep in mind of what percentage you're using. So if you're going to do anything like a music paid app, oh, hey, I'm using Pandora, and you do a $10 thing, but you only drive 1 hour a week. So let's just be real, you're not using 100% for work. So you need to be honest about those and keep track of those different factors. So you can track a lot of things. Look at all these different amazing expenses you can do. At the end of the year, you can go to right here, send my tax report, and you can look at your expenses and your mileage, and you can send your report straight to your email, and you can send that to your CPA, or use you can use you know, TurboTaxes, which what I use. Let me address one final thing that's super important. You can either track, when it comes to driving, that's going to be the #1 tax deductible thing. Right now, as of now, the IRS has set apart $53.5 cents per mile. Meaning, let me just show you how that looks first, and this is important for me to show. Let's say I start driving right now. Record a drive. You see it says 53.5 cents per work mile. Wherever I drive, it will track it. And at the end of it, I press stop and save, and it'll show me how much that's tax deductible. I didn't drive anywhere at that moment, so it didn't show. So here's, let's see, this is one I did the other day. I drove for 52 minutes, and I drove 27 miles. So 27 times 53.5 is $14.89. So that could be a tax deductible account. This is really good for me because I have killer gas mileage. But if you do not have good gas mileage, let's say you're driving a van, or you're doing XL or Uber XL or something like that, or you just have a gas guzzler, and you're getting 17 miles per gallon, maybe you should track it. What that would require is that you track all of your, keep all your receipts of all your gas, and add them all up. And if you add them all up, you can actually turn out a lot better than this 53.5 cents a mile. But for most of us, especially if you're driving Uber X and regular Lyft, you are going to turn out better for the 53.5%. And you know, here's another thing. Let's say you get a car and you have tons of expenses on your car. This 53.5% is including wear and tear. It's including oil changes and so forth. But let's say you get a crazy big expense, like you need new tires, you need new transmission, new everything. It's like $5,000. Okay, I mean that happens. That you get a lemon car, you're putting down $5,000. There's no way what you're driving, 53.5 cents a mile, is going to total that. So in that case, tracking everything is going to turn out for the biggest tax deductible. So you have to play around with this. You got to know, you know, honestly, if you want to do it best, you want to track both. And at the end of the year, calculate which one turned out better, and then you will maximize your tax return and perhaps pay little to nothing on taxes. All right, hope this is helpful, and make sure you pay your taxes, and especially track your tips, because that's something you get in big trouble for not claiming. All right, hope this is helpful.